Spreads tight, I'm locked in deep, no rest here. I don't sleep, bulls run wild, bears come down. I own this chart, I wear the crown. Come trade with me now, I'll take you down. Lips on fire, hearts unbound. Money talks, I love that sound. Come trade with me now, don't fade out now. No fear, no doubt. Come trade with me now.
This week, the Forex market is being shaped by a mix of economic data releases and central bank commentary, setting the stage for some interesting movements. Let's dive into what's been happening and what to watch out for. First off, inflation remains a hot topic. You might feel it when you're at the grocery store or filling up your car. Prices are still high, and that's influencing central banks to keep interest rates elevated longer than perhaps expected. This week, we've seen how these persistent inflation numbers are making borrowing more expensive, which affects everything from your mortgage to your credit card rates. Next, we have employment data. Jobs numbers have been surprisingly robust, which is good news for anyone looking for work, but it also means that central banks might not be as quick to cut rates as markets had hoped. This resilience in the job market is creating a backdrop where currencies tied to economies with strong employment figures are finding support. Lastly, risk sentiment has been fluctuating with some geopolitical tensions and mixed earnings reports. Investors are toggling between risk on and risk off, which can lead to volatile movements in currency pairs. Now let's look at the FX market over the past week. The top movers on the upside have been the AUD-USD, which has gained 1.2% in the last 7 days, and the GBP-USD up by 0.9%. These moves reflect a bit of a risk-on sentiment, with commodity currencies like the Aussie benefiting from a positive outlook on global growth. On the downside, the USD-JPY has dropped by 1.1%, suggesting a slight weakening of the dollar against the yen, possibly due to differing monetary policy expectations. Currencies making meaningful moves this week include the EUR-USD, which is down by 0.7% over the week, indicating some pressure on the euro, perhaps due to concerns over the European economic recovery. Meanwhile, the CAD-USD has seen a slight uptick of 0.5%, supported by steady oil prices. Now let's focus on currency pairs to keep an eye on for a reversion. According to our data, the EUR to GBP is currently at the bottom of its 10-day range, suggesting it might be overextended to the weak side. This could be a potential reversion zone where the pair might bounce back if market sentiment shifts. Similarly, the GBP-AUD is at the top of its 10-day range, indicating it might be overextended on the strong side. If risk sentiment changes or if there's a shift in commodity prices, we could see this pair pulling back. These extremes matter because they often signal that a currency pair might be due for a correction. When a pair reaches the top or bottom of its recent range, it's like a rubber band being stretched too far. Eventually, it snaps back. To wrap up, this week's Forex environment is dynamic, with economic indicators and central bank policies driving the market. Staying informed is key, as is managing your risk. Remember, Forex trading involves significant risk, and while opportunities abound, so do potential pitfalls. Keep your strategy flexible and always be ready to adapt to the ever-changing market conditions. Until next time, stay calm, stay informed, and trade